Tesla fans and investors are all holding their breath and grabbing their seats to see how many sleek cutting-edge Teslas will hit the streets this year. But there's a catch: automobiles aren't the only thing that matters, they can also help you reach your financial goals faster. In this article, we'll delve into the fascinating world of Tesla's Q3 deliveries and their tumultuous effect on the constantly changing stock market. Get ready for an exciting ride through numbers and a bit of stock market drama. But wait, there's more. We've set up exclusive talks with market experts. Financial experts and Tesla insiders who can explain what it all means. Will perform a tango of triumph or a cha-cha challenge. High sales numbers or quietly parking the garage, it's all here, along with the analysis and the energy. But before we go any further, make sure to hit that like button. Thanks for watching. This is Tesla Stock News, and we'll send you this video. Now, let's continue the movie. The impressive delivery count of over 64,000 cars in July from Tesla's Shanghai factory made waves. This rise may be due to ongoing improvements at the Shanghai facility. Now, let's take a look at this quarter's. As you probably know, I'm very interested in Tesla and have been following the stock's ups and downs. Let's talk about the powerhouse. In July, they made an amazing 64,285 deliveries in Shanghai. Not including the upgrades, that number could have gone even higher, maybe even over 70,000. But don't worry, those upgrades are all part of a bigger plan to make Tesla and its owners money in the long run. We all know that Tesla is all about long-term vehicles, and now that production of the Model 3 has started in the New Highland, the upgrades are definitely important. Moving on to August, I think that the upgrades will be in full swing, though I'm thinking they might extend it even longer, which could affect daily production. Currently thought that 2,500 vehicles, figuring that will make a solid 60,000 vehicles in August. Consistent daily production in September leads to a huge 75,000 vehicles. Okay, now when we go to Fremont in July, they discount 51,000 vehicles because it's Independence Day. Due to possible upgrades, August cuts 7 days, giving us an estimate of production of nearly 41,000 vehicles. As usual, September brings in just over 49,000 vehicles, bringing the total number of cars made in these 3 months to 141,000. Okay, now Berliners are stealing the show. Every day, 800 vehicles were made in July, for a total of 25,000. I'm hoping for a rise of 6,000 vehicles per week in August. Keep in mind that this may have been proven by the time this video comes out. With a 7-day snip from August, we're looking at about 20,000 vehicles. With 27,000 vehicles, September stays on track. Overall, Berlin's share is an amazing 72,000 vehicles. Now let's change gears and go to Austin, where the excitement is real. July had a holiday for Independence Day, and each day 750 vehicles were made, for a total of 22,500 vehicles. In August, things are a whole different story. I'm being safe by cutting 7 days from August 31st so that we have 24 days to make over 19,000 vehicles. But I think the magic will happen in September. I want Austin to make 6,000 vehicles a week, with a holiday for Labor Day. That's almost 25,000 vehicles. Austin is in the spotlight because they've made over 66,000 vehicles. That's a defeat, if you ask me. Now it's time to add up the numbers for a big show. If we don't count July, Shanghai produced almost 415,000 vehicles. If we count July, that number might be closer to 480,000, but for now we'll leave it alone until we have more accurate numbers. After analyzing the data, we found that a whopping 393,918 vehicles were delivered, with Shanghai's July deliveries bringing the total number of vehicles delivered to over 458,000. I know I said 466,000 on Twitter, but a double check showed that number was lower. It's still impressive, though, especially when you consider that upgrades are playing a big part in the demand. Just take a look at those inventory charts to see why the average selling price is expected to rise from $43,800 to $44,200. The reason for this is that demand is real and supply is playing a bit of catch-up. I'm giving credit to Nod at 250, and while Q2's numbers are surprising, I'm hoping for a turnaround service. Thanks to a higher average selling price, leasing and car gross profits are going up. Now let's talk about auto revenue without credits and profits. Energy is also getting a lot of attention, with an estimated $1.9 billion. The percentage is still 18%, but who knows, it might go up to 19% in Q3. Additionally, operating costs, taxes, interest, and other small but important issues are still being discussed, with a steady $450 million. Imagine those millions of dollars quietly growing. Tesla is not missing out on the chance, they are taking it. Credits, that's about 450 million shares. Now for the juicy Q3 details, here's the estimate. A lot of cars, 458,223, are being sent out, right? In the big picture, the total revenue from vehicles may be a little lower than in Q2 because the upgrades are briefly affecting the leverage. We're hoping that these upgrades will soon get the production engines firing up and vehicles being made at lightning speed. Now, let's look at the financial HUD. Gross margin stayed the same at 18.2% for the quarter, and sales are through the roof at nearly $25.5 billion. Holding on to net income is also no easy feat, with a GAAP of $2.9 billion and a non-GAAP of $3.3 billion. These strong numbers point to a healthy bottom line. We'll talk EPS with 96 cents, the non-GAAP number looks good. Streets are talking about low 70s, but that number could go up as more information comes in. This looks like it will beat Q2's performance, but there's a small drop in total EPS, which could hurt the stock price. Speaking of stock prices, they're currently around $250 with a PE of 71. Using the same price-to-earnings ratio for Q3, we might see a drop to around 241, a number that could attract smart investors looking for deals. When the Q3 results come out, there might be a bit of a market fear. Some people may be worried that Tesla's market share will cause the stock price to drop. With a PE of 60, the price could even go as low as $220, and with a PE of 55, it could even go as low as the lower $200s. Still, if the market feels better with lower interest rates and more general optimism, things could get better. The stock could soar to a PE of 80 or 90, or even hit 300. For now, let's keep things in the real world. A PE of 75 seems like a safe bet. Being careful and focusing on Q4 is the best way to play it, because that's when the real show might happen. If the changes that were promised in Q3 happen, a huge 525,000 vehicles will be delivered. But don't be surprised if that number goes up to 540,000 or even 550,000. The point is that Q4 could be a game changer. We're shooting for an 18.3 vehicle gross margin, which is similar to the good numbers from the first quarter. Don't miss the big finish. Energy sales brought in a cool $2.5 billion, and profits reached a huge $525 million. If that isn't amazing, I'm not sure what to say now that it's time for the big Q4 reveal. Get ready, because this quarter could be unbelievable. It's getting close to $30 billion in overall sales. With a GAAP of $3.7 billion and a non-GAAP of $4.1 billion, the company is set to end the year with a bang. It looks like the fiscal year will end on a high note, with an earnings per share (EPS) of around 3.40. This would mean that the price-to-earnings ratio is in the neighborhood of 90 or even 100, and the stock price would be hovering around the 340 mark. To keep our feet on the ground, a PE of 80 seems like a reasonable bet. Now let's talk about the realistic price ranges. As we say goodbye to 2023, we can expect the stock price to be between $270 and $330 per share, and the number of vehicles delivered will be crossing or even beating 1.9 million. Now, year-over-year growth from 2022 to 2023 is a respectable 42%, especially when you consider the changes in the economy. That's all we have for today. If you liked it, please give it a thumbs up and don't forget to subscribe to Tesla Stock News for more. Thanks for watching. Seeing you next time.